Hello and welcome to the presentation on what is a point of bookkeeping. Today, I'm going to go through my presentation, and it's going to be clear and concise in about 15 to 20 minutes, and then I'm going to hand it over to Michael and I'll introduce him later. So, what is a point of bookkeeping? So there are many reasons why you want to start with a bookkeeper. You want a loan. For a loan, you have to have your financial statements together. For a grant, for if you want to bid on contracts, it will make your taxes easier. It'll help you create a budget. It'll help you be ready for if you're audited. And if you can't keep it in your mind the whole time. So if you start to lose track of your income and your expenses, this is will help you out. You can also do cash flow analysis, which Michael will talk about later. You can also do trends. Like if you have this feeling like, oh, in September, I always have more revenue. Well, if you have the data, then you can look at it and say, okay, that is true, and you can plan around it. And then you can also have key process indicators, which are different indicators or that you can look at and see if you're performing the way you want to be performing. So what does a bookkeeper do in a practical sense? So what I do, like if you were to hire a bookkeeper, I work with QuickBooks. So I would set that up if you don't already have it. I find a lot of people will start with self-employed, but self-employed QuickBooks is a different product, and you actually have to manually transfer to the regular QuickBooks. So that's a good place to start is the regular QuickBooks. I can help set that up. I connect your credit card and your bank to QuickBooks, and then that starts bringing in all the transactions that you do every day. Then we will have decided what the categories are for the transactions, and I make sure that everything goes into the category that it's supposed to. And then I monitor everything to make sure it's correct. Things come up, sometimes there's bank errors, sometimes an invoice is unpaid, and it can cause a difference in the system. And after I've done all those things, that the result of that is that QuickBooks will make financial statements. And you can go into QuickBooks itself and click on reports, and then everything you have done throughout the month will show up on the profit and loss, on the cash flow statement, and the balance sheet. And the balance sheet is more if you have assets of some kind, like you bought a fridge and you have to write off on a certain amount on your taxes every year. So I help you with that as well. So let's see, let's go this way. So when do you need a bookkeeper? So I always tell people you can wait. There's no rush to get into bookkeeping. If you want to learn it yourself, you can do that, but you can wait until you're ready, and it's okay just to have Excel for a while. I would recommend not getting a bookkeeper until you're making 50,000 a year in revenue. That's kind of the point where things get complicated and hard for you to keep track of. But yeah, you can wait longer till 75,000 in revenue. It's just when you're completely ready is when you should start. But you don't want to start doing QuickBooks and then mess it up, because then you will have to pay to fix it later. And that can be very expensive. Okay, so what is commingling? It's an issue I see a lot where people will use their business card for their personal expenses, or put their business expenses on a personal card. If you put your business expenses on a personal card, it's not as big of a deal, because maybe if you're only making a few $1,000s a year, it doesn't really matter. But if you're putting your business expenses, if you're putting your personal expenses on the business card, it can look to the IRS like your business expenses are just personal, and they can say that it's disallowed. And they can make you take that off, and that's really bad. So I'm going to stop for a second, just see if there's any people I need to admit into the room. I don't see anybody. Okay, so go back. Okay. All right, so when to get a bank account is related to commingling. Same when you're ready to. If you have your business expenses on a personal account for a little while, that's okay. But when you start having more expenses and income, you want to start separating them and keeping track of them separately. But there's not a right answer for when that will happen. Okay, so I want to make some points about payroll. So payroll, it's pretty easy to pay somebody to do it. ADP and Paychex are automatic, and you can connect them to QuickBooks. It's very simple, and they track everything. You don't want anybody doing taxes manually, because if you mess up the Medicare and the Medicaid and Social Security numbers, you can really get in trouble. So there's no reason to do that. It's super easy to have that taken care of. I wanted to make some tips about taxes that I see people do a lot, is that they will say that they're paying too much in taxes. What happens is that people assume that you need to do an LLC, and that might not be the best choice, because what happens when you have an LLC is that you pay on the profit everything, all of your FICA taxes, Social Security, Medicare, Medicaid, you pay that on the whole profit. But you can switch to an S corp, and then you pay yourself a salary, and then you only pay taxes on the salary. So that reduces your taxes by a lot. And if you have an LLC, you might be thinking, well, I just need to get more deductions. But more and more deductions are not going to solve that problem of you're just paying too much in FICA taxes. So when should you get an S corp? About 80,000 in revenue is when you can start thinking about it. But it depends on what kind of company you are. Like if you are if you're a landlord owner or a landlord and you own properties, then you want to stick to LLC. But other companies, you want to look into the S corp, because you might be able to save a lot of money. The pitfall with S corps is that you have to pay yourself enough. Sometimes people will underpay themselves so that they can pay less in taxes, and that's something the IRS actually looks at. How much do you pay yourself? Because that can be a problem if you're underpaying yourself to avoid taxes, and they can see that. Yeah, so like I said before, once everything is set up properly, the financial statements will be set up in QuickBooks. You'll have your cash flow statement, you have your balance sheet, your profit and loss. There's also tons of other statements in QuickBooks that you can look at, like your accounts payable, which is how much you owe people, your accounts receivable, which is how much um, people owe you. And there's just a lot of QuickBooks has tons of reports to make your life easier. And not only that, you can go to QuickBooks, and QuickBooks has something called a cash planner. And you can go into the cash planner and you can say, I expect to get $500 next month. And you can enter that, and it'll show you altogether what you should be expecting for next month. And you can play with it, and it won't mess up your books at all. So you have options to play with your cash if you want to, which is the whole point of this exercise is to get data. And so we have data for the cash, which is what Michael's going to get into, is all this data so that you can evaluate the data. All right, so I'm going to take a quick moment to, and then we're going to go to Michael.
Okay, let me see if I can share my screen. That was some great stuff, Maya. Thanks for that. Let's see if.
Yeah, let me make you the host now.
Okay. Okay. Can you see it now?
No, it's still circling.
Okay.
Just give it a minute.
Still buffering?
Still buffering.
Okay. Let me try something again. Just stop share for a second and do it again.
Okay, there it is.
All right. So, no business can get very far unless they have a grasp of the numbers. Today, I just want to share with you what I do once Maya puts the numbers together and why that's important. We'll start with why that's important first. Now, most business owners, myself included, have the business is their livelihood, their retirement, their legacy. So they can't afford to have it fail. All business, though, will face some obstacles, but these obstacles don't have to derail the business. Let me show you how you can counter all the major obstacles. And there are about 5 major ones. I'll put them in broad categories. So the first one is cash. The business doesn't have enough of it. That first one is so important, I'll drill down just a little bit, not much. So you can get access to cash in 3 ways. You can get it through debt, equity, or operations. Of course, you can also get it from yourself if you have it, but let's stick with debt, equity, or operations. Those are the 3 big ones. Now, debt is essentially a loan. You all know that, your line of credit your credit cards, your small business loan. Equity, on the other hand, is people giving you money. So think of a company like Uber, has been around for decades. Um, they didn't have profit or anything like that for a long time, but they had investors throwing money at them, so they always had the cash. A third way you can get cash is through operations. That's the business operations. All business was really built to generate cash. Some do it a lot better than others, but they all can do it. And that's where I step in. Of course, I'm getting a little bit ahead of myself. So let's go back and look at some other major challenges. We just talked about cash. Okay, a second major challenge is what I call the business catch-22. The business is between a rock and a hard place. They can't grow unless they have more money, and they can't get more money unless they grow. A third major challenge is complete reliance on the owner. That owner does everything. They're the chief cook and bottle washer. They really need a team. The problem is, though, a team costs money. Your fourth major challenge is the business owner doesn't really know what's working and what's not. A fifth major challenge is that the business owner doesn't have clear goals. Now, they may have actually written down their goals, so I won't say it again, but in a little bit different way. That business owner doesn't have a clear path to follow or specific steps to take to get from A, where they are, to B, where they want to go. Now, let's take a look at ways that we can counter all these challenges. See, we're doing okay on time. Now, we can do this starting today. One of the first things that you actually do is look at where you have been. Not where you are or where you want to go, but where you have been. Now, you're all familiar with the saying, it's not what you make, but what you keep that matters. I think that scenario actually really is really clear when you look at the typical financial statement. It has the revenue that you brought in on top, your expenses are next, and what's left is your profit. But that doesn't tell the whole story. How many of you at tax time have looked at your accountant in disbelief as they have told you how much money your business has made or lost? I think we all have. So that points to the fact that it's not profit or revenue, though important, should really be the focus of the business owner, but cash, cold hard cash that comes into the business. Now, cash that comes into the business, or cash flow. You think of cash flow just as the amount of money that's added to or subtracted from your bank balance. I mean, it can get more complex than that, but think of it that way. So last month you had 10 in your bank balance. If this month it's 8, you know you have lost 2. It can be the other way around though. Maybe you had 10 last month. This month you had 12. So you know you have gained 2. That's the one you want. But how do you get it? How do you get it consistent with that positive cash flow? The first thing that you're going to do is look back a year or two. Look back. Find out where you have been. Find out where you've been in relation. We know that you want cash flow, positive cash flow. So find out where what has happened when you generated that positive cash flow. Now, you want to go a step beyond just looking at the cash flows. Really, if you have a chance, you can look at what drives or influence cash flow. So you're looking at the drivers of cash flow. Okay, typically in most businesses, there can be hundreds of drivers, but about 12 are really significant, really impactful. Now, I was going to go through them each one at a time, but we probably won't have time to do that with what I want to cover. So let me give you a taste of why that, of how it would look for a business owner to actually run their business by just focusing on the drivers of cash flow. Bear with me, I'm just going to skip around some slides here. I think this is 53. Okay, let's say the business owner is just working by the drivers. One driver is the number of sales. You can see that. Maybe I should make it a bit bigger. So the number of sales they had was 625. Can you increase that? Can you say you looked at one additional prospect each day, just one. So that's 5 a week, 20 a month. So we're close to 680 prospects. Now, if we just close on like 20% of that, and everybody knows that a 20% close rate is terrible, but if that's all that we got, we're close to 680. If you multiply that by the 500, you see revenue increase by close to 40,000. The bottom line, your net profit would also increase, probably not by that 40,000, but it would also increase. But if we got serious about it though, could we increase that above 700 or above 750? And could we increase the second driver, which is average sales outstanding? If we increase both those two, then we really have a big jump in revenue. And all going, we would have a corresponding, not the same big increase, but we'd have a corresponding increase in net profit. So that's how we look, that's what it looks like when you just decide to run your business focusing on the drivers. And that was just the profit drivers, not the cash flow drivers. The cash flow drivers are the ones in yellow. And those have like a direct impact on your, not just on profit, but on your cash. That has a direct impact. The first 6 had a indirect impact. Okay, so now let me skip around a bit again. We gotta go to 73. I always like to give like takeaways before I end the presentation. So the biggest takeaway for you guys is to know that there is a predictable way to grow your profit, your cash, that enables you to make more money in less time with less stress. Growing your profit and cash is inevitable once you understand how to move the right numbers. So it's not just for an Apple or a Microsoft. The small to medium-sized business is able to do this as well. So what do you do now? Well, you could try to do it for yourself. You can get familiar with the drivers of cash flow and what they mean. Once you do that, you can find out how you did last year. You're maybe setting a base, a benchmark. You can set targets of where you hope to go and create a forecast each month that allows you to track where you're performing against Each month, track how you're performing against your targets and keep score. Of course, you can focus on one or two of the most critical drivers that are off track and create a plan to get back on track. You can do that, or you can hire someone like me, a small business CFO, who would do that for you. And that's basically it. I don't want to run out of time here, so be like that. I'm an accountant who helps businesses have a growing and successful business. I take on a handful of new clients each month and have just one mission. That's to help you have a successful and more profitable business. And wow, I could have done some more. I'll just end it right there. But I didn't notice that I didn't know that I would run out, that I would do it that quickly.
So, are you finished?
Yeah, I'm finished.
Okay. All right, so I'm gonna take you off hosting.
Okay.
If you can stop sharing your screen, please.
Okay. Stop share.
And I'm gonna share mine.
Uh-huh.
Oh, let me make sure I'm the host. Okay, well, thank you very much for coming to our presentation. Let me know if you have any questions. My email is mrobinson@futureproofaccounting.com. And what's the best way to reach you, Michael?
Oh, I have a slide here that
Okay,
you can take a picture of it if you ever want to reach me. Can you give me
yeah,
back the ability to share?
yeah.
Okay. Because I'm not really on Facebook, but I'm definitely around. Yeah, so if you took a picture of this slide, you'd be able to contact me at any time on LinkedIn, by my email, or you could call me. And my
Okay.
name is Michael Coombs. Maybe I should have done that so I don't have to have you
Yeah, well, I want to get the screen up before I stop recording.
okay. Okay, so let me stop share and put it back to you.
Okay, so you're still a host.
You to the host. Let me,
Do you want me to be the host?
yeah,
You want me to take it back?
yeah, please.
Okay.
Okay.
And did you have the screen you wanted to share?
Yeah, I actually shared that screen already.
Oh, you did. Okay.
Uh,
All right. So thank you everybody for coming to the presentation and have a nice day.
yeah, and